All right, one more person and we're back in, okay? Give it one more minute. I'll give it one more minute.
Oh, I'm sorry, I'm not muted. Can you hear my TV?
Yes, I can.
Sorry. Hubby's watching King of the Hill.
Okay. All right, awesome, guys. So, all right, 1 minute's done. Let's keep going. So, as I was saying, oh, let's look at someone send me a chat. Let's see. Cool. All right, awesome. Anyways, so so then you start putting the pieces of the puzzle together. Example, just an example. Man, price. Price is above the blueberry, and it's also above the mayo. You then realize that price is trading above the 1 hour and the 4 hour. I am probably in day 2 or day 3 in the cycle. The moving averages start making these fanning pictures, like a fanning picture. I'll show you what it looks like. But that's what I want you to understand from this, okay? How the moving averages can come into play, help you out where you are in the cycle, help you to take profits, so on and so forth, okay? So let's look at these moving averages. Okay, so here's an example. This is, remember, the mustard, the ketchup. It's kind of crazy how you can count the levels here. 1, 2, 3. See that? Kind of crazy with price. And then you see a W on the mayo, and look at price rise. Crazy. You can just see it with the moving averages. 5 and 13 for ketchup, mustard, and ketchup, okay? Moving averages again over here. You see how price is going, bounces off the mayo, keeps going. So you see how this is on the 15-minute chart. This is the hourly chart. You see how the water is here, and on the hour the water is here, and they do a crossover. They get some of this. They're barely crossing, meaning this still has strength in it, okay? So this is how you start using the moving averages, okay? This still has strength in it. However, possibly the blueberry is going to be here, so this is already letting you know, okay, well, I'm already approaching day 2 or day 3 of the cycle. So this is still going to keep continue its way up, okay? So this is how you use them. This is how you use the moving averages on the so you won't have to keep on flipping through the screens, through the hour, through the 4-hour chart to see where price is at on the bigger time frames. Respect. But yeah, you get the point on this one, right? Okay. So price, USD CAD, hourly chart came up, and look at this. You can't see it as much, but here's a blueberry, here's the water here, mayo in here. I circled that right there. Price was still bullish, went up for like a good 100 plus pips based off of just moving averages crossovers, okay? Obviously, you need to combine where you are in the cycle and all this, but once you understand and you combine all these elements together, this is good. This is a good trade. Took it for what, like 50 cents, got like $500 profit here. Again, here, GBJPY, this is a very aggressive pair. Look at this. It held the mayo. This on my, because this is a white screen, my mayo is black, but it's supposed to be white, but this is my mayo. This triggered, this was a new spike, I believe. This was a news, sold it, hold the mayo, price rose, dropped like 200 pips. Easy trades, because you need to follow the trend on these, okay? Follow the trend. depending where you are in the cycle. This is how you start using the moving averages, okay? And then, okay, everybody in here, I'm sure y'all remember, I'm sure y'all remember with EuroCAD, I kept saying, man, EuroCAD, like, what the hell? Like, why isn't it dropping? Why? Why isn't it dropping? I know some of y'all remember this trade from like 2 weeks ago, you know? So why wasn't it dropping? I know why. Look at this. And make when you start noticing that price is not dropping as it's supposed to, reverse like 200 plus pips, so on and so forth. This is when you start putting the moving averages into play. MA cross on the hourly. Mayo, Blueberry, man, this is a good movement up. Good movement up. You follow the trend as I listed here. Follow the trend. This went up for another like 250 pips before it actually corrected. So just you know, just to give you a guide. So when you start noticing these and it doesn't drop, I'll talk about the level resets on lesson 3, but this was pretty much a level reset. Level reset again, back into home. Remember, the 200 price likes to come home, likes to come to the Mayo, okay? Most of the time. So when this happens, I'll talk about the level resets, but this was a level reset, went up, okay? This is how I want you to start using the moving averages. So you can put these on your phone as well. It's exponential moving averages. All right, so this is the picture I was telling you about, okay? This is the picture I was telling you about. This is a very important picture, so if you want to write it down or screenshot it or draw it out, feel free, okay? This is what I mean. Cross of the 50 EMA over the 200, cross of the 5 and 13 EMAs over the 50 EMA confirms level 1. Price over here, cross the 50. This is level 1 already. Level 1 in the cycle. Cross of the 50 EMA over the 200 EMA confirms level 2. You see here, now you see it went here, stop hunt low, rise. Funny, huh? Stop hunt low, rise. This is the 200 EMA. It crossed over, okay? 50 crossed over the Mayo. Water over the Mayo. Okay, got that, okay? Now what's next? Cross of the 200 EMA over the 800 EMA confirms level 3. So the Mayo cross now over the Blueberry over here. Again, funny, right? Stop on low, rise. W, what is the pattern cycle again? W, V, V. And what am I expecting here now? M, back into the range. You see how when you start putting all these things together, you can start getting a directional bias. Get some of this out. So yeah, so I'll give you a few seconds, or if you want to write some of this down or screenshot it, okay? But yeah, so okay, let's see. Got a chat. That's brilliant. Okay, yes, very brilliant. Yes. So make sure you screenshot this, okay? It's a very, very important piece of the moving averages, okay? So what I want you to understand, that the greater the angle and separation in the moving averages, the more likely you are in level 3, price action. Be ready for the reversal, okay? And this is, you can start noticing a fanning. Okay, they muted themselves. All right, cool. So you can start seeing, this is why I also highlighted this. So you have all these confirmations giving you, okay, man, you know, so W, stop on low rise, stop on low rise. What is the cycle again? W, V, just quick overview, W, V, V, M. And the cycle backwards, M, A, W. Very important, okay? All right, let's continue. All right, pivot points. These are the pivot points I was telling you about. These are the pivots, okay? Pivots. M3 central pivot point. See central pivot point. The M1. We use the M1, M2. Oh, okay. I'll talk about it right now. M1, M2, M3, and M4, and the central pivot point. I'll explain that in a bit. Okay. Some of this out. All right. So back to here. So pivot points are calculated on daily candles. What do you mean by that? What do you mean by that, Cash? Okay, so let me break down the daily candle for you, okay? So you know what happens in the daily candle. In a daily candle. Okay. ADR example. ADR is 100. Market makers only able to move price 100 pips for the day, okay? So what are they gonna do? So you notice the daily candles, okay? They have a pin here and a pin here, right? They have 2 pins here. So what have we learned? Remember the cycle? Hit the stops, drop, hit the stops. Example, this is possibly a M1 or a LOD or whatever there is. They pull back and consolidate. This is a daily candle. So when you notice, this is why they're always like this, because they hit the stops 25 pips up. This is all a 50 pip movement. They pull back 25 pips, ADR 100. They cannot exceed this. So this is what happens in a daily candle. 25 pips up, 50 here, 25 pips down to the downside and pull back. So this is how you start combining all these things together. So this is what happens in a daily candle, okay? Oh, hello? Oh,
Oscar,
yeah.
you were cutting out, and then I guess it just like, I don't know what happened.
Am I, okay. Am I cutting out now or no?
It doesn't seem like it.
Okay. All right. Okay. Cool. Okay.
I forget what you were saying before you started cutting out. Maybe someone else remembers.
Okay. Were you able to get the part about the daily candle?
You're still talking about the daily candle, and you're talking about it being at LOD. I think you're talking about
Okay. So I start
on M1 or M3.
Okay. So I started cutting off there. Okay. So yeah. So this is the daily candle breakout. You know, ADR 100. The market maker is only able to move it 100 pips, right? Okay. So they hit the stops high, 25 pips, drop, hit the stops low, back in consolidation. This whole move was 100 pips, ADR 100. So this is why you see pins to the upside, hit the stops high, hit the stops low, and back in the range and consolidate. So this is what happens in the daily candle.
And now,
Darn it. Back. Hello, everybody still here? I'm kind of having connection issues, darn it. Okay, so yeah, that was the purpose of the daily candle. So how with the M1 and the M3 and the M1. Okay, let's see, chat. Look at the chat. It's cool. Okay, all right, thank you. So yeah, so as I was explaining, yeah, the daily candle, M3 and the M1 day. I'll show you a demonstration of what I mean. There's actually a picture where I took a trade. It was an M3 and an M1 day. Pretty cool. Hit the stops high, hit the stops low, consolidate. I'll show you, okay? So back to the pivots. A red candle indicates a M1 and a M3 day. The green candle indicates a M2, M4 day. The M1 and the M2 pivots is where the LOD may form. They are located below the central pivot point. So here, get some. You see, this is the central pivot point. You see how the M3 is above the central pivot? M3, possibly M4 somewhere around here. M2 is somewhere around here. This is M2 right there. And then M1 is over here. You see how they're, you see, let me show you. You see how this was a M, this, you see how here it was a, I believe this was a M4 day actually. Yes, M4 day on USD CAD. Funny. M4 day, look at it. Drop, a M4 back to the M2. This would have been a good trade to take. I'll explain this in a bit. All right. And the M3, M4 pivots is where the HOD may form. They are located above the central pivot point. So yeah, let's keep going. Oh, and another thing, a break of one level is almost always certain to give way to the next pivot level. Example, if price came from the M3 and it went to the M1 and it broke past it, there will be another pivot somewhere around here. I think it's called the M0. So if this breaks here, you can put a trading stop here. You could put a trading stop here, aim for this area, book your profit right there in this area, okay? Most of the time when they break a pivot, that's what it will happen, okay? So this is how you use the pivot points to help you, okay? To help you understand. So let's look at the next slide, okay? Okay, just a demonstration. The M4, you see how the M4 forms around the day high? You see that, right? You see when you start adding all these elements together and you start noticing, oh, okay, example here, let's just say price was WV, another V here, over here, hit the stops, rise, hit the stops. This could be a M4, M2 day. You could expect this price, hit the stops high, hit the stops drop, hit the stops drop. M4, M2 day. I'll show you a good example of what I mean by that. There was a good trade I took on that. I'll show you what I mean. All right, this is the example I'm talking about. USD CAD. So remember what I said, that when you start adding all the things together and lining them up, this can be a possible good setup. So before and after M3, M1 day, I knew price was rising. I think about 2.5 to 3 days. It rose, came here, came back, repeated the level back in London. Okay, so here was the HOD. There was also a M3 pivot here. So, and this was a Wednesday, midweek reversal. Like, what else do you want? They repeat the level and they failed to take this area out, which is why I circled it, which is why I have a square box on it. They failed to take it out on a Wednesday, midweek reversal. Man, this is a good setup. The only reason my entry was here was because I missed it. I kind of saw it a little late, but this is why it was a little late. But you see, so now this is where you start adding the levels, but I'll explain the levels on the next lesson. I projected this. Look, price was not here yet, but I already knew the M1 pivot was here. The M1 pivot was in this area, okay? The M1 was here. And look what happened. Look what happened. 1, 2, and price hit this area. This was where the M1 pivot was. It hit it. So you could have done an intraday swing. Actually, you could have taken it here. You would have took it an M3, M1 day. You know this would have paid out. Aim for the M1. Book your, how many pips was it? Like 120. Book your 120 pips. Man, beautiful, beautiful intraday swing right there. Just using the pivot points. This is how you start using them and helping you out in your trades, okay? Let's see. Someone got a question. It's cool. How many pips should we, Curry, on reversals, we should usually aim for for 25 to 50 pips, 25 to 50 pips, depending where you are in the cycle. Also, if you're taking a multi-session M like this one, it is okay to book 50 pips or more. Okay. So, but on reversals, like your counter trend trading reversals, 25 pips, either the water or the mayo is okay. All right. As I explained yesterday, the water and the mayo are usually good take profits. Okay. All right. Perfect. Cool. All right, Curry. Okay. I got another question. Yes. Okay. So if the M3 and the HOD are there, like in this example, and keep in mind the cycle though, Sile. Okay. Keep in mind the cycle. All right. So I knew price was rise about 2.5 to 3 days. Keep that in mind. Okay. When you have all these things lining up, and the cycle was an uptrend, and your daily candle. Remember, I explained the daily candle that on the M3, M4 day is red. Okay, so let me show you a demonstration. What I mean. Okay, so green. This was 3 days. Let's just say it was 3 days of rise. Just say example, and then this last candle closes as a doji on an M3 pivot on an HOD multi-session M. This is how you start adding things up. So this is how you know it's a good trade. Okay, Seal. All right, so let's move on to the next one. Pivot points continue. So yeah, so this is how pivot points help. Let's see. Okay, gotcha. All right, cool. So this is how pivot points help you project the HOD and LOD. Remember, this is not a replacement of the pattern. It is in conjunction with it. A break is, like I explained earlier, a break of one level is almost always certain to give way to the next pivot level. So if you're in a trade, you can hold until the next pivot level. And also keep in mind, like example on NFP, you see how it did a monster move like 200 pips. Big market moves will often disrupt the pivot points for the following trade session. So when this happens, identify the pattern. WVVM, MMAW. They do not fail. It's like a mini reversal. Curry, I'll have to look into that. We'll look into it after we're done with the session, okay, Curry? Is that okay? All right, awesome. All right, cool. All right, awesome. Let's keep going. All right, the TDI, Traders Dynamic Index, a better RSI. Yes, I can say it's a better RSI. Gives better signals and trade confirmations. A powerful tool to scale in with when used in the proper context of the market. I'll explain what I mean by scale in, okay? Will help build confidence with your trade calls, and will help identify divergence easily. For those who know divergence, is not going to be a big deal on that one, okay? And the TDI is already set on a 21 period on the template I sent you, so you don't have to worry about that. All right. So the TDI is composed of the RSI price line, green. I'll show you a picture. Green. Okay. The trade signal line is red on the TDI. Market baseline, yellow. And something about the market baseline, by the way. On a traditional indicator, the market baseline is fixed. It's fixed on a 50 and a 0 on the MACD and a 0 on the CCI. It doesn't, and it's funny because it doesn't move. It stays there, right? So what happens is that the market baseline comes out to visit you sooner and gives you a signal earlier, several bars ahead of a traditional indicator crossover from the midpoint, which will help in confirming the M's and W's sooner and keep you in the trade. Okay? And the volatility bands. The volatility bands help us catch divergence. So this is what I mean, right? The the RSI is green, the trade signal red, market baseline yellow, and the volatility bands are the ones that are outside. These are the ones that are outside, kind of like Bollinger Bands, okay? For those that use Bollinger Bands, which I hope you're gonna stop using now. So we're gonna use the TDI from now on, okay? But you can't use a RSI on your phone though. All right, next slide. You can screenshot this if you want. Volatility bands, okay? Screenshot this if you want also, or take a picture. Volatility bands act as support and resistance based on the close of the candle. When the bands contain the RSI line price after a break, it is divergent, a stop hunt. Example, I'll show you a picture. I believe I have a picture here to show you that. When viewed in the proper context, they can identify stop hunts, scale ins, and exits. Okay, so now let's go to some of the trades you can take with the TDI. Write this down, take some pictures. I'll give you some time for this one. Shark fin short is a trade that is called in the market making method. This is when the bands are tight. Okay, let's say Asian session. This is the price though. This is price, okay? TDI is over here. The bands are really tight. Bollinger Bands, everything is tight. You expect this is when you do this, price goes up, TDI goes up, and it does this. Price does a sharp turn like this. TDI does the same thing. This is what I mean. This is what I mean. Shark fin short. A shark's dorsal fin appears to be emerging from the water. Fin goes back under the water line and crosses the signal line, red, blood in the water. So it crosses the signal line, the yellow line, and then crosses the red, blood in the water. This is what I mean. So this would have been a good trade to take. You got a TDI confirmation, price coming out of the Asian box. You possibly have like a HOD or something here. This is good to go, or a Mayo or a piece of moving average there. It's good to go, okay? I'll show you a picture of what I mean. Next slide. Okay, so here's a picture. See how Asian range. Look at your TDI, tight range, and look at this. Price when emissed to funny vectors again. 1, 2, 3. This green, the HOD, funny. Here's a HOD right here. I don't know if you can see this line, but it's right there. It's right there. Funny. And then look at your TDI coming out. See that? Blood in the water, back into the water line, back into the signal line. Beautiful. This would have gone. You could have got right there. Beautiful trade right there. That's what I mean by that shark fin short. Shark fin long, the same criteria as a shark fin short, okay? The setup must coincide with other indicators. Shark fin long. This is an actual chart, USD CAD. This was July 4th. Price was coming down. You see this fat W over here, multi-session W. Look at your TDI. Shark fin long, blood in the water. On the coming out of the London, 1, 2, 3 vectors on the shadow box, multi-session, TDI confirmation. You know this trade is good. You know this trade is good. So what do I expect? Rise 1, 2, 3. Price must correct and back into the range again. Asian range accumulation. Accumulation. When you start adding these things up, this is amazing. This is how you start combining all these indicators to help you out, okay, on your trades to build confidence. Again, here, what is this? GBP USD, a very aggressive pair. So again, vectors 1, 2, 3 into the shadow box. Look at your TDI, giving you also a confirmation. It goes back inside. The trade is good. On GBP, you know this is about double pips. So your take profit could have been here. Again, for the one who asked me a question on reversals, you could have took profit on mayo or water on this occasion. Mayo or water. It's funny. You see how did a multi-session W and price rose again. 1, 2, 3. Reverse and must correct. Reverse back into the range. Again.
Loaded with hypercolor pigments for one stroke intensity. Honey nectar, citrus feel.
Shark fin long. So this is how I want you to help you understand these indicators. Again, another example. USD CAD. Again. Look at this. Price was coming down. 1, 2, 3 over here. You see this pin to you see how the TDI catches this stop hunt? Look at this. Shark fin long. Confirmation TDI. You could have got here. Got out over here, somewhere around here. If you want to take that short, you could have got there. Come here, price rose. On the HOD held the whole time. It did a head and shoulder on the HOD. Price drop. Look at this blue tracer. Again, it holds, does a railroad track. A railroad track, gets in, gets out immediately. TDI again, giving you a confirmation. Multi-session W. Now you know this is a good trade. It's about to pay out. Reversal, take profit here. Water, take profit mayo. Back, chop, and look at this. Again, another trade again. Let me erase some of this. Again, you could have taken this. It held again. Look at this. Multi-session M on this one. It held 2 sessions. And look at price drop again. Look at this. This is beautiful. This is how you start combining all these tools to help you in your trades. All right. All right. Shark fin. This is a trade that we call shark fin hold the mayo. Okay. So you see price was coming. Okay. It held here. Keep in mind price was dropping. Okay. Price was dropping. It held here. Price came back. Look at your TDI. Cool. You probably would have not taken this, but it would have came down. If it came here and ended in a pin and railroad tracks out of the mayo and your TDI confirming, and shark fin hold the mayo 2 times, man, you know this trade was gonna pay out. So 1, 2, 3. Now we expect what? A reversal. And look at your LOD again, this blue tracer, very important. Always keep this in mind. Blue tracer is right here. W, railroad tracks got the hell out of there. TDI again, confirming your entry. Got in right there. Take profit here. It barely missed the mayo, but it's okay. It's cool. Got out right there. Book your 25 pips right there. Okay.
Meningococcal disease. Tremendous should not be given.
会跟他讲话吗？我要叫他帮我买点饭，等一下在火车上出来的时候。
Ask your doctor or pharmacist.
All right, and let's see. Got a question. Mute. Let's see who do I need to mute?
Meningitis B can be Sharing
我来了，谢谢。
a spoon, a kiss.
Cool. Got it. Got it. They're muted. And scaling with the TDI. Scaling with the TDI. Scaling means adding more contracts to your trade. Adding more contracts. Example, let's say, okay, keep in mind, HOD again held, HOD out of the Asian box, 1, 2, 3. 1, 2, 3. You could have got in right there, right there. That's a good trade. So you start adding. Look at your TDI. Sharp fin short. So 1 entry. The TDI goes into the trade to the signal line. That's your second entry. And second entry, okay? Second entry. Add another. Let's say you got a 0.5 here. You're like, oh man, look at my TDI. It's it crossed the signal line, giving me a confirmation. I know this is gonna go 1, 2, 3, chop, chop. Okay, so you could add a 0.10 here, and again, let's see. Okay, again, and then over here, your exit point. This is your exit point. When the TDI gets out of the volatility bands and starts to kind of do this, you get out. That's when you start getting out. This is your exit. I wrote it down here on the beginning of the session for New York. This is when you start getting out, okay? This is when you start getting out. So you could have got about, what, 80 pips? What is this? Euro Japan? Yeah, you would have got 80 pips with all these scales ins, okay? Let's see. So we expected. Yes, when the signals are presented, Sile, when the signals are presented, okay? So if we go back to this trade example, the one I showed you earlier, on this example, you see how the Mayo held, but keep in mind price, I'll talk about the straightaways though, okay? Price was coming down from here. It held again. I would get in on the second pin to the Mayo, CL. If that's your question, I would get on the second pin. I would have not gotten on this one personally. But if price comes back here and repeats the level, and it does this, and TDI gives you a second confirmation, yes, I would have got in here, held the Mayo. Price is a downtrend anyways. Yes, I would have taken it. I would have taken that trade. An example, if the HOD was here, same thing. TDI outside, same thing. Took in the trade. It would have been a good trade. Okay, Seal? Okay, cool. Nice. Scaling in, got that. All right. This is a little more advanced, but I still want you to understand this. The pair USD Japan, this show you this is an actual recent chart, July 25th. All right. Level 3, price was rising. I knew this was level 3. Price was rising. You see this head and shoulders, and look at the blue tracer. Look at the blue tracer again. Correction was imminent, as I wrote down. Correction was imminent here. So what did I expect? 3 levels of drop. I'll explain the levels on tomorrow, but 3 levels of drop. 1, 2,